top story now, the spread of coronavirus is already taking its toll on the country's economy. President Cyril Ramaphosa last night declared the pandemic, national disaster. And now, with strict travel restrictions and extraordinary measures in place to curb the spread, should we expect an interest rate cut, for example, as has happened in other countries? We've seen the United States cutting it almost to 0%. Well, let's bring in Duma Gqubule, economist and director of the Center for Economic Development and Transformation. Duma, very good evening to you. So thank you for coming in. We are several weeks into this pandemic globally. Only 2 or 3 weeks in South Africa where we've had infections reported. What can we do now to protect ourselves economically?
Let me first say that the President's announcement yesterday and the Cabinet today, they focused on the public health measures. Now, if you look at the response to this pandemic throughout the world, I've looked at all the major economies and also the major developing economies. There are 2 measures of a comprehensive response. The first measure is the public health measures, and then the second one is the macroeconomic policy measures. The reason for this is that a pandemic like this is unique. A pandemic-induced recession is unique because it results in simultaneous shocks to the demand or spending side of the economy and the supply or production side of the economy, which doesn't happen in most recessions. So it's a very serious situation which we have to address. So many countries, as you correctly said, the United States cut interest rates to 0 to 0.25%. The United Kingdom cut rates, emergency rate cut of 50 basis points and a $38 billion stimulus. The European Central Bank has got negative interest rates already, and they have continued to provide financing to small businesses. And if you look in developing countries in Asia, Malaysia, Indonesia, Hong Kong, all of the countries in Asia that are close to China, they announced massive stimulus
packages as well.
Stimulus packages, yeah, all the countries. Also South Korea, 13.7 billion, and also Australia, Canada, New Zealand, they announced record lows in terms of their interest rates. So people are doing whatever it takes to stimulate their economies. And just one more thing I have to say is that many of these countries, the central banks have run out of ammunition to fight the recession. So they are now at what is called the zero lower bound, near zero interest rates. So I predict that in the next few weeks, we're going to see more emergency measures where government implements helicopter drops of money into these struggling economies. So what happens is the central bank prints money and it creates a fiscal stimulus funded by the central bank printing money.
And how much space or leeway do we have to do that currently? I mean, everyone wants the Reserve Bank to announce a rate cut. But how much can they cut?
No, I've been saying that we need an emergency rate cut of at least 200 basis points. Basically, the context is our country is in the worst post-apartheid economic crisis. We've had 5 years of declining GDP per capita. We've had 2 recessions in 2 years. We're now heading for the 3rd recession in 3 years, almost certainly. So we need to take extraordinary measures to revive this economy. So now, what is the situation right now? The impact of this pandemic-induced recession is that there will be deflationary impact. Oil price is now below $30. Every single central bank in the world is cutting interest rates, so there are no exchange rate pressures. And the inflation rate is at the mid of the target of the... There is no excuse for the central bank not to cut interest rates. And it would be a tragedy if all the members of the Monetary Policy Committee show that they don't care for the pain of ordinary South Africans.
But as you were saying, the stimulus that the economy needs currently will require more than just a rates cut.
Yes, of course. Now, in every country you have a rates cut, monetary policy, and a fiscal stimulus. Now, the strange thing is that the President said he's going to announce fiscal measures, and then the finance minister contradicted himself. He said he's going to release about it's about 5 billion rands from the National Disaster Funds, which is a very little money for a stimulus. It's not enough that we need. We need more firepower. And he says that I will fund the stimulus by cutting other expenditure. So by definition, that is not a stimulus because it's happening within the same austerity envelope that got us into this crisis.
So from a health perspective, we're hearing that we need to beat this particular coronavirus outbreak by the time we get to the winter, because that's when infections are most likely to rise. Economically, how much time do we have?
No, we don't have time. There's a disaster scenario facing our economy. There's a downgrade that will happen next Friday, possibly. as I said, our economy is heading for a third recession in 3 years. Some economists are predicting a decline in economic growth for the whole year. So that would be 6 quarters of declining GDP, and that is 2 quarters away from a depression. So we don't have time to get our economy in order, or else we're just going to see a self-fulfilling panic in terms of a declining economy. And what happens in a declining economy? Government revenue goes down, ESCOM revenues go down, and you might see a default of ESCOM, you might see the budget deficit go to 10%. This is a disaster scenario that is facing our economy.
In listening to you speak, Duma, I don't think I even want to get out of bed tomorrow.
Yes.
But we must.
Yeah, we must.
But we must. Oh dear, there goes half my pen. I want to ask you about those people who already do have stocks and other investments. Who is likely to come off worse off in a continuing pandemic?
You know what? I've been looking at the stock market. So since the beginning of the year, until last Friday, we lost 23%, and that is 4 trillion rands of investments down. So last week alone, we lost 12.5%. So it's a huge drop in terms of the stock exchange, whatever, yeah.
And in terms of the messaging from government on its handling of the public health aspect
the public
itself, how much does that play into how the markets will shape up going forward?
Okay, the markets globally, they are going to be looking at the new cases and the deaths. So there's going to be a lot of instability for the next 2 quarters globally until we see declining death rates and new cases, like what has happened in China. So that should, hopefully, what we've seen from the Chinese, I was reading the report by the World Health Organization and the China Joint Mission, and the Chinese managed to contain this epidemic in 4 to 6 weeks. So if countries adopt similar measures that the Chinese did, they could possibly do that in the same time.
Economist Duma Gqubule, hopefully next time I see you, it'll be for a much happier conversation. But for now, thank you so much for coming in.
Thank you.